Welcome, crypto fam, to the #1 daily Bitcoin pod. In today's show, I'll be sharing the latest Bitcoin technical analysis as we're currently correcting, as you can see. Also, Bitcoin's hash rate just hit yet another all-time high. And quoting the high priest of Bitcoin, Max Keiser, Max and Stacy created more Bitcoin millionaires than Michael Saylor, particularly in 2013 when he publicly hated it. That's right. We have the receipts to show you that. We'll also be discussing Arthur Hayes explains why the Fed rate cuts aren't helping Bitcoin. The flow of money has gone from treasury bills into the higher yielding reverse repos, according to the former BitMEX boss. We'll also be discussing Brazil Supreme Court upholds the judge's decision to suspend Elon Musk's X. That's right. All across Brazil right now, X is suspended. We'll also be discussing Bitcoin wallets holding over 100 Bitcoin hits a 17-month high, according to this data. That's right. While the small traders are panic selling amid the price weakness, Bitcoin whales are busy stacking them sats and loading up the BTC. We'll also be discussing investor Hugh Hendry sees reasonable odds of Bitcoin hitting a massive $200,000 price target. He says his cash is ready for the dips. And speaking of bullish price targets, we have another analyst who says Bitcoin's about to mimic the Japanese stock market incredible late 1980s rally. That's right, sending Bitcoin parabolic to 760,000 per coin. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. If you're new to the channel, very important to smash the likes. Go ahead and subscribe. It's free to do so, and it's greatly appreciated. Hit the bell icon, turn on all notifications. That way you get notified each and every day when I go live. Today is pod 1749. I'm your host, JV. It's September 3rd, 2024. Lots to cover. Market currently correcting. I woke up, we were 59.5. We just started dumping. We're currently at 57.7. Let's see how low the price action shall go. Let's kick it off with our market watch, as we do each and every day. You can see Bitcoin down 1.5%, trading at 57,800 on Coin360. We have Ether down 3%, trading back under 2,500. XRP, one of the only top cryptos actually in the green today, but barely. We also have Solana, Tron, Cardano, AVAX all correcting and in the red. Checking out coinmarketcap.com. We currently have a market cap barely above 2 trillion. It's 2.02 trillion as we're steadily declining. The Bitcoin market cap all the way down to 1.14 trillion, 55 billion worth of volume past 24 hours. Bitcoin dominance 56.4%. Ether dominance back on the decline at 14.5. Yesterday was 14.6. Checking out top 100. Crypto gainers past 24 hours. Up 3%, Monero up 3%, and BSV up 2%. Let me know which alts, if any, you are bullish on for the bull. And checking out the crypto bubbles, get a visual perspective on the day. I swear, about an hour or two ago, everything was in the green. Now virtually everything is flipped back in the red. Welcome to cryptocurrency, where the volatility equals life force. And zooming out on the monthly, don't look really much better. I'd say 80-20, blood wreck city in the red. And checking out the crypto greed and fear index, I was really hoping we'd hit a bottom in extreme fear of below 25, but for some reason, we're like holding on to this 26 fear, one number above the extreme fear. So already, can we just get the extreme fear and bounce back to 60? But anyways, last week was a 48 and last month a 34 in fear. And checking out the time chain calendar, the current block we're currently at for the Bitcoin network is 859,714. We have 190,286 blocks yet to go until the next halving, which is scheduled to take place in April of 2028. And you can currently receive 1,731 Satoshis per dollar. Not too shabby. Probably only cost you roughly $500 to be a Satoshi millionaire right now. So take advantage of the dip, and let's continue. Let's dive into today's Bitcoin technical analysis. We'll check out some of the live charts as well. So here we go. This headline reads, Bitcoin price nearly hit 60,000, but traders still see a bearish September. So will it be a September or a September bull? Let me know. Here you're looking at a one-day chart, and Bitcoin traded near 59,000. In fact, we were like 59.5 when I woke up. So, but we started correcting right before the stream went live, and now we're down 3% on the day. Trading views showed promising Bitcoin price action before the week's first U.S. trading session. Weakness around the monthly and weekly close did not last long, as despite a U.S. market holiday, Bitcoin spiked to highs of 59.8 overnight. Constructive closes and confirmations are looking pretty good now, according to Scoo. He also noted that the price needed to complete various prerequisites to confirm upwards continuation. Amongst them, a reading above a 50 on the 4-hour RSI. And at this time, the RSI is at 48.9. Quoting him here, going forward, would want to see the monthly open bought by passive buyers on the pullbacks. And here you're looking at the 4-hour chart. And having started off in a classic style, traditionally red September, now began to look more interesting to market participants. Dan Crypto Trade shared, so consensus is September bad, Q4 good. What if September insanely good, Q4 more chop and bleed? Now that would be pretty typical for this cycle. And in further analysis, he acknowledged that even in the bad months, the first week was green more often than not. So historically, the first week of September is bullish. Will we continue? Will history rhyme? You got to tell me in the comments, fam. Others saw standard behavioral patterns, albeit with a bullish outcome waiting in the wings, quoting trading firm MN Trading. Dull market, which is usually the end of the stage before the party begins. And Mikhail Van de Pop shared regarding the price action on Bitcoin, you'd really need to get a breakout above 61,000 to get that momentum back in the markets. Otherwise, we continue to have this downward trend for a while. Now, meanwhile, Bitcoin and gold face a familiar challenge. In the latest market bulletin from QCP Capital, they warned that gold, which set a new all-time high in August, may join crypto heading downward. This status quo could remain in place until October, till the fourth quarter, which has historically been much more bullish. Quoting them here, September is typically a bearish month, not just for crypto, but across all asset classes. October, however, has the strongest bullish seasonality, with Bitcoin showing positive returns and an average gain of 22.9% in 8 out of the last 9 Octobers. They concluded that if this pattern plays out again this year, it would be strategic to accumulate during the September dip and take profits in October or towards the end of the year. Now, in other news, Bitcoin just hits yet another all-time high, which is a metric we like to, commonly follow here on the stream. I mean, the numbers don't lie. As long as Bitcoin continues breaking out, reaching new all-time highs, the price tends to follow. It's a lagging indicator. And quoting the high priest of Bitcoin, Max Kaiser, Max and Stacy created more Bitcoin millionaires than Mikey Saylor, particularly in 2013 when he publicly hated it. That's right. Michael Saylor made a tweet back in 2013 in December. It's still up on his X account, formerly known as Twitter. And he says, Bitcoin is going to suffer the same fate as online gambling, and hence why it took him 7 more years to come around and finally buy some Bitcoin. Check this out. Throwback. Who do you think is the most important representative of Bitcoin, Mikey Saylor or Max Kaiser? I am hands down selecting Max because, again, the Kaiser report put Bitcoin on the map. First one to share international TV coverage Bitcoin. And back in 2011, Bitcoin was $1. And that's how long Max and Stacy have been telling you about Bitcoin. Again, Michael Saylor came late to the party. He was even fudding it back in 2013. He thought it would suffer the same the same fate as online gambling. And clearly the Giga Chad was wrong. And clearly everyone pays for the biddy at the price they deserve, which is another infamous quote. So yeah, let's check out the charts right here. This is live chart action Jackson, brought to you by TradingView via Coinbase. You can see Bitcoin hovering above 57,800. You can see we do have a target on the 1-hour chart sitting just above $60,400. Let's zoom it out. We'll check out the 4-hour, work our way back. Here on the 4-hour chart, you see we had that big red candle, which took us right back to the territory we're currently in. You know what I mean? And zooming out a little more, we'll check out the daily. Here's the daily chart. Again, live and in the flesh right now. Look at that sideways action. We had a big red, big green, big red over the past 3 days. And then, of course, about a week ago, we had the big 2 red candles taking us all the way back down to this territory. We're not out of the clear yet, bro. I think we do need to get above 61,000 as well so we can be back on bullish momentum. And checking out the 1 week, we still have the infamous cup and handle target sitting all the way at roughly $125,000. I personally think we can clear that target most likely in Q4 of this year. But let me know your thoughts, and we'll zoom out and check out the monthly real quick. quick. Here's the monthly chart. And again, it's just been trading sideways for the past 1, 2, 3, 4, 5, 6 months. Pretty insane. But prior to that, we had 7 green monthly closes. You can see the staircase pattern, but then we've been trading sideways since. But there you have it, yo. Let me know your thoughts and where do you feel the Bitcoin price action will likely take us next. Do you think the bottom is in when we tap 49 more recently, or do you think we'll correct potentially lower? Let me know either way. Yeah, so our next story, we just broke down our live TA. Let's discuss the Fed rate cuts as per BitMEX co-founder Arthur Hayes. He explains why the Fed rate cuts aren't helping Bitcoin. Arthur Hayes, co-founder of BitMEX, shared his theory of why the interest rate cuts by the U.S. Fed may not do much for the Bitcoin prices. In a post September 2nd, the Maelstrom chief investment officer said despite Federal Reserve Chairman Jay Powell all but confirming a rate cut in September at his Jackson Hole speech on August 23rd, the Bitcoin price has struggled and declined since. Since the speech, the Bitcoin price briefly spiked to 64 before falling 10% to 57.4 September 2nd. It recovered slightly and now it's back down. It's kind of crazy. And given his take on why, Hayes pointed to reverse repurchase agreements, the sale of securities with the agreement to repurchase them at a higher price at a specific further date, noting they are paying 5.3% interest. This is higher than the Treasury bills, short-term government debt obligations, which pay the lower yields of 4.3%. And as a result, large money market funds are taking their cash out of the Treasury bills and putting it into those RRPs instead, resulting in less money floating around the market for risk assets such as crypto, explained Hayes. X account LE5 of TLDR explained that the RRP program can act like overnight parking for the big banks and money managers to park their cash. They explained that this is also paying more than other safe investments, so capital stays in the parking lot instead of flowing through the economy. And since the Fed announced the probable September rate cut, an additional $120 billion went into reverse repurchase agreements. And Hayes highlighted that the development goes against the assumption of the lower interest rates, which are good for the high-risk assets, such as the Bitcoin. Many believe that the low interest rates encourage borrowing and spending, which leads to more liquidity in markets as safer interest-bearing accounts are no longer as attractive, while a weaker dollar can make Bitcoin appear stronger. And according to the CME FedWatch tool, there's a 69% chance of a 25 basis point cut and a 31% chance of a 50 basis point cut at the Fed's September 18th meeting. A larger rate cut would signal a more aggressive stance by the Fed, potentially leading to a more dramatic market response and a bigger boost to economic activity. So there you go. Do you agree or disagree with just Hayes, Arthur Blaze? Let me know. Let's continue and let's create some more whole coiners, shall we? Next story, let's discuss the saga between Brazil and X going on right now. Brazil Supreme Court, which is the highest court in the land, upholds the judge's BS decision to suspend X. Can't make this up. A Brazilian Supreme Court panel upheld a decision from one of its justices to suspend operations on X in their country. In a unanimous decision, September 2nd, a panel of 5 Supreme Court justices held Justice Alexandra de Moraes. Again, I'm probably butchering his name, so bear with me. August 30th, ruling suspending X in Brazil. Moraes' decision followed ex-owner Elon's refusal to name a legal representative for the firm's operations in Brazil. Now, I'm going to assume he didn't want to name a representative because they were going to freaking go after them, more than likely. In the months before Moraes' decision, Musk heavily criticized the Supreme Court judge on X, claiming he was evil and a dictator for his alleged illegal political censorship of the social media platform. It is unclear how the ex-owner may respond to the court ruling now that 4 other justices agreed with Moraes' ruling. Now, Moraes had been investigating X for allegedly allowing and promoting misinformation related to the former Brazilian president, Jair Bolsonaro. Since Musk's takeover of the company, then Twitter, October 2022, many companies have pulled advertising after reports of pro-Nazi content appearing alongside their ads. Again, you can't make this up. According to the Moraes decision, X will remain suspended in Brazil until the company pays outstanding fine. Well, I guess that's what it's all about. Totaling more than $3 million as of August 30th. Brazilian residents and companies using VPNs to access the site could also face fines of up to 50,000 reals, which is roughly 8,900 US dollars. Next story, let's discuss these Bitcoin whales, eh? Shout out to all my Bitcoin, diamond hands, laser eyes. Headline reads, Bitcoin wallets holding over 100 biddies hits a 17-month high. Shout out to all the whales out there, yo. The number of the Bitcoin wallets holding 100 biddies or more has hit a remarkable 17-month high, according to blockchain analytics platform Sentiment. This surge, and I ain't talking about the crypto surge, was propelled by a notable increase in whale holdings over the past month. In a post on the 31st, Sentiment shared that over 283 wallets holding at least 100 Bitcoin emerged within the past month alone. So congratulations all the new whales. With this addition, 16,120 such wallets on the network has broken a 17-month high. Now, Sentiment attributed the increase in whale holdings to small traders impatiently dumping their holdings to the bigger players amid the recent price dips. Quoting them here, as crypto prices had let retail traders down, Bitcoin whales are growing in number. And in a separate post, crypto analyst Axel Adler noted that the traders might be offloading due to the pressure of not risking selling below their entry point. Quoting him here, for exactly 1 month, short-term hodlers, who are those who hold for 1 to 3 months, have been trading at a loss. In the current bull market, this metric has not fallen below 17%. The current figure is negative 8%. If this continues to decline, the number of people willing to sell coins at a loss could double. Now, clearly, those selling at a time like this are the dumpskis, quoting Donnie Brasco. Don't be a dumpski. You know what I mean? Smart money is hodling. Now, Sentiment also revealed that the wallets with at least 10 Bitcoin, known as the sharks, how many sharks we got here in the chat? Let me know if you're a shark, are also stacking up more of the asset. According to the analytics platform, whales and sharks have collectively scooped up 133,000 biddies, worth $7.6 billion. And speaking of Scoop, rest in peace, Fat Man Scoop, who recently died suddenly at a concert. That's a topic for another conversation. Over the last 30 days, in contrast, the analysts added, the smaller traders are dumping their holdings amid the short-term price weakness. Meanwhile, Vivek Sen, founder of Big Row Lab, pointed to a historical pattern between increased whale activity and the price of the biddy. He noted that the Bitcoin hit a new peak the last time the whales accumulated much of the digital asset. However, the increase in whale activity has yet to impact the price of the biddy. At this time, as you know, Bitcoin is down, obviously, for the month. Hasn't been doing so well for the past 3 months. However, September could be a September bull. We don't know. And I think fourth quarter, I'll reiterate, I'm very bullish for Q4 because historically, that's when Bitcoin rips. So let's go. But anyways, let's continue. Still got a lot more to share. Welcome everyone just joining the stream. Let's discuss this $200,000 target, and then we'll discuss a massive $760,000 target. Then we'll dive into our live Q&A. Welcome everyone just joining the stream. Appreciate you guys here. Investor Hugh Hendry sees reasonable odds of Bitcoin hitting a massive price target, says his cash is ready for the dips, and he's ultimately projecting $200,000 for the King Crypto. Macro guru Hugh Hendry believes there's a solid chance that the biddy will ignite a nearly 240% surge, but notes that he is also prepared in case the King Crypto corrects. In a new interview with independent journalist David Lin, Hendry says that while he is not an expert in the intricacies of the biddy and crypto, he can still see his capital invested in Bitcoin easily appreciating by a 3x. Yeah, easy peasy. So at 60, 120, 180, easy peasy. Just saying. According to the macro guru, his rosy outlook on Bitcoin is based on the Bitcoin bull market structure, the size of the market cap, as well as the potential buyers for the King Crypto. However, he highlights that it is also within the realm of possibility for Bitcoin to crash to levels last seen in October 2023. Sober October, eh? Quoting him here, when I look at the biddy, that's 1 trillion market cap, could easily be 3 trillion. Easy. So I think Bitcoin could half or triple, quadruple. It could trade at least at 200,000. And that's right. A quadruple is 60, 120, 180, 240. Ballpark. 240 G's, baby. Hendry says that if Bitcoin witnesses a market meltdown, he is ready to scoop up heavily the discounted coins, believing it'll eventually hit his massive price target. Quoting the analyst again, if Bitcoin were to half, I would buy. So if he's saying if it went to 30,000, he'd buy. Wishful thinking. I'd actually bring my cash reserves and I would buy Bitcoin at 30,000. And like I say, I think there is reasonable odds that you can see it trading at 200,000, especially with that risk to reward ratio. If you're a firm believer Bitcoin's going to quadruple to 200,000 plus, why wouldn't you just buy the Bitcoin at the 58,000 at today's price instead of hopeful thinking or wishful thinking, as I refer to it as, praying to the Bitcoin gods that you get it at 30,000 may likely never happen. In fact, the bottom may already be in at 49. There's no guarantee. So stupid. Just buy the Bitcoin now, dollar cost average, and count your blessings knowing we're going to soar above 200,000. Anyways, that's my 2 Satoshis, family. Let me know your thoughts. Now for our feature story of the day, yo. Bitcoin about to mimic the Japanese stock market's incredible late 1980s rally, according to this analyst who projects Bitcoin soaring to $760,000 per biddy. In fact, he even shares his timeline. I'm going to break it down for you right here. Popular crypto analyst thinks Bitcoin is currently mirroring the Japanese stock market's giant rally about 4 decades ago. 40 years, yo. Synonymous analyst TechDev shares charts with his 500,000 followers on X that compare the Bitcoin performance since 2010 with the performance of the Nikkei 225, a price-weighted index that tracks 225 blue-chip companies trading on the Tokyo Stock Exchange between the years 1950 and 2000. TechDev's charts, which you can see here, suggest Bitcoin can crack 760,000 per biddy sometime between 2028 and 2029, yo, before witnessing a multi-year bear market. In fact, here are the charts pulled up here. You can see them ripping. This is according to the logarithmic growth curve. So this is the log model. And he also posted this chart here, which is also comparing Bitcoin again to this Japanese stock index. And if, again, we can potentially hit $760,000 if everything plays out accordingly. But nonetheless, the top ranked crypto asset by market cap is currently correcting. The analyst also shares a chart that has a line for the Bitcoin price and a line that pits the Chinese, this is the Chinese 10-year bonds here that we're looking at in the second chart, CN 10-year, against the M2SL, the seasonally adjusted measure of the money supply of the United States. So based on this chart, you can see on your screen, he appears to suggest an expansion in the CN 10-year against the M2SL would trigger big Bitcoin rallies, again, the Chinese 10-year. Now, last month, TechDev noted in a newsletter he was optimistic about the recent downturn of the crypto market, quoting him here from the newsletter. Obviously, there is extreme fear in the market. The last 2 weeks were filled with told you so comments from doomer bears on a retest of 48,000 levels they previously said would never be reached. The last time they were doom posting at 25 Gs. Exactly what I like to see. The fact that it came at a time when the global macro conditions are pointing up makes it nothing more than 2 weeks of loud noise to me, more like the last 6 months. It is usually the case in all the speculative markets, but the last 2 years have reflected this more than any other time of the crypto market. It doesn't move up until X is scared, absolutely shitless. That was the case at 15,000 after the FTX crash, at 20,000 after the regional banks were failing, and at 38,000 after the brutal post-ETF wick. And now, deja vu, family. He also says, what y'all also recall is how much sentiment can whiplash in a couple of weeks, expecting it again. All the while, the global cycle continues to point higher. So there you have it, yo. What are your thoughts on this bullish $760,000 chart projection as we continue soaring post-halving 2024? And again, he gives us the targets by the time of the next halving, 2028, 2029. We can anticipate Bitcoin cracking some of those levels. Let me know if you agree or disagree with the crypto analyst. And welcome everyone to the Q&A segment of the live stream. I see we got over 700 people here with us right now. This is your opportunity to share comments, ask questions, and you could interact on the chat in the YouTube direct link, cryptonewsalerts.net. The chat stream is coming from the tube. Also, you can chat now directly on X. I'm going to show you how to do it in case you don't know. So when you go to X, you're going to notice the stream pinned at the top of my profile. All you do is click on it. It looks like that. And then at the very bottom, it's hard to see, but it says live chat. So you can now chat on X. So you click the live chat. There's usually a bit of a delay for a few seconds, and then the chat will appear. I'm going to be interacting with you guys on X as well as on YouTube. So you can comment on X or comment on the YouTube. And either way, I got you. But like I said, there's a bit of a delay for the comments to appear on the X. So like Andrew Tate said, people are ignorant. They buy at the high when they need to be buying when it's at the low. Shout out Andrew and Tristan Tate, 100%. Most people buy at the high of the last cycle. They remain down until the new all-time high. You're right. People love to buy when it's at an all-time high. Ironically enough, it's human psychology. 225,000 end of the year, 500 to 750,000 cycle peak. 2025 predicts the Oracle. And if, like Max says, the dollar is going to belly up, they will see much higher. That's right. I covered in yesterday's pod, Max Kaiser prediction is that the dollar crashes within 6 months. He doesn't specify his definition of the dollar crashing, but we can all use our imaginations. And of course, if the dollar does crash, it's going to make Bitcoin that much more stronger. We could see hyperinflation with the US dollar purchasing power get smacked even worse than it currently is. Yeah, meaning you can buy less for every dollar you have. And then Bitcoin will have the opposite effect. Bitcoin's purchasing power mathematically guaranteed to increase your purchasing power, right? Hence, it's the greatest savings to ever exist. Hence why everyone here should be stacking the biddies. I'm okay with 760,000. No complaints here. Yeah, I dig it. Personally, I think we can go higher. I think 1 million by 2029 is my prediction. I've been sharing virtually every stream. However, that's ballpark. I'll take 760,000. I'll take it. I think we'll be at least 1 million after 2 cycles in 2035, says Toasty Toast. But the U.S. government will seize Bitcoin from the ETFs, Coinbase, and Binance to convert to cash as fiat crashes. Holla to my cousin, Nick Gertz. Shout out, Nick. And I agree. And I'm glad you brought that up, Toasty Toast. Most people have so much trust in their U.S. government. Oh, they would never do that. They can't get away with it. No, they would not. I agree. I think Max is right. I think the U.S. government will absolutely confiscate the Bitcoin BTC. To me, it's not even a question. It's like common sense. When is the $1 million question? I don't know when. Maybe they're going to keep accumulating and try to get 5-10 million Bitcoin on their balance sheet. And then, Democratic Party, hypothetically, if they're in power, they send the letter to the freaking Coinbase CEO. This is just hypothetically how it can play out. Brian Armstrong, in the name of, what did they say? In the name of, I forget the terminology, but in the name of national security, something like that, we need to seize all the Bitcoin in the possession. And Coinbase already have the majority of the Bitcoin because they're the custodian for BlackRock, the world's largest asset manager. Most of the other asset managers, minus Fidelity, I think the only major asset manager doing the self-custody thing. But they can just steal everyone's Bitcoin just like that. In fact, what just happened to Binance, as an example of what can happen in real life, they just seized, allegedly, all the Palestinians' crypto from Binance. And the CEO didn't even question it, just handed over all the crypto to the state of Israel. Crazy. So to think it can't happen is naive. That's just my opinion.